Hey everybody, Kyle Sasser here, and it's everybody's favorite time of the month. That's right, real estate market statistics time. These real estate market statistics are for the Dayton Metro area for June 2025. Now, as you can see, we are back in Studio D. D is for downstairs. So this is downstairs at my house. This plant has gotten phenomenally large. If you go back and look at videos from a year and a half ago, this thing was quite a bit smaller than this. This thing is definitely getting super bushy. You might also be asking, Kyle, I have the report in my hand here, downloaded from that link in the description down below. I have the report in my hand, but the report actually says May. Why are you calling this June numbers? Well, mainly because June's when I record this, and the most recent complete set of stats are from May. Hang on a second. Our video assistant just stopped by, so this is Bijou, my real estate assistants. If you do decide to contact me for help with the home, Bijou is one of the people that will be helping you along the way. So she's very sweet. But I'm trying to record the stats video for these nice people, Bijou. Thank you. So May is the most recent complete set of numbers, and what we do is we always look at month compared year over year. So we're comparing May 2025 numbers to May 2024 numbers. The reason we do that is because weeks and days are way too short of a time frame, and you will have things like holidays or particular weather patterns that really throw a monkey wrench into short-term comparisons. So month is kind of the smallest block that you can do. And the additional problem is if you compare month to month, there's a natural ebb and flow in the real estate cycle through the course of a calendar year. So for example, wintertime is naturally a low point. So if you're comparing winter numbers to fall numbers are always going to be a little bit higher. Same thing with the school year. Things tend to drop off immediately before school ends and immediately before school starts. So couple little tidbits there. So we do compare year over year. All right, so let's dive into these real estate market statistics for the Dayton Metro area. Total number of closed sales was up 2.3% from 1,192 to 1,220 homes. Median sales price was up 7.1% from $247,250 to $264,770, while the average sales price went up 4.6% from $282,453 to $295,539. Median percent of original list price held out pretty steady, 0.4% reduction, so it went from 100% to 99.6%, and median time to sale dropped 26.2% from 42 days to 31 days. That number of the Dayton market, unfortunately, we don't track in this particular MLS when the contracts were issued, or at least there's not an easy way to do it. So what we need to do here is usually I take median time to sale and I subtract about 30 days from it, and that gives me a rough time to contract. So last year we were doing 42 days time to sale, which means a 12-day time to contract. This year we have 31 days to sale, which means if we subtract 30, that means things are going under contract super fast. So you really have to be on your toes nowadays. That does correspond with, anecdotally, helping my clients with purchases. We have been running into more multiple offer situations currently. Total number of new listings held pretty steady. Dropped 0.1% from 1,615 to 1,613. Active inventory is up pretty significantly, 26.8% from 1,289 to 1,634. Foreclosures and short sales were up 9.1%, which sounds terrible until you realize that it went from 11 to 12 in the entire Dayton Metro area. In short sales, there was a total of 2. So not a lot going on in the doom and gloom segment. Now, I do like to break things down by the different price categories because $1 million house usually sells in a little bit different time frame than a $300,000 house, and primarily it's just because there's not as many buyers in that $1 million price range. But before we get to that, I do want to kind of go over, so I do keep an eye on the month to month just to kind of see what the overall trend is. So, last year, May, June, July, we were also at 100% median percent of original list price received. That dipped all the way down to 96% in the wintertime, meaning that initial asking price, houses were selling for less than that, which usually means demand is softer and prices tend to be on a slightly downward trajectory with that. But since February, it's been 97.9%, 98.8%, and now it's 99.6% again. We're back up very close to that 100% mark, which again, anecdotally lines up with my clients so far as submitting offers and how much competition we have been seeing out there on the buyer side. Same thing with median time to contract. It was 42, 43 days in May and June of last year. It lengthened out all the way to 53 days and 63 days in January, and then 65 days in February, and now it is retracted all the way back to 31 days. The pace has quickened. Now, so far as the different price categories and stuff like that, by and large, every price point, things are selling faster, right? So 150 to 200,000, 15% faster, 34 days. 200 to 250,000, 35.7% faster, 27 days. And this is time to sell, not time to contract. Remember that. So you kind of have to subtract 30 days off of that. So that 200 to 250 price point, things are selling in less than 30 days. And to me, that says there's a significant number of cash offers in that, which is allowing them to close faster than that typical 30, 35 day contract window. 400 to 600,000 is 40% faster, 27 days, and so on and so forth. The $1 million mark is the greatest increase, 72% faster for a total of 19 days, which is nuts. So there's been a number of things in Oakwood and Kettering, kind of along like the Big Hill corridor there, like Ridgeway and all that stuff, where things have been going under contract in that $1 million mark super within a few days. That is not typical though, so I'm fully expecting that number to increase in next month's stats. Total number of closed sales by price. The overall trend for this for the last few years has been like less expensive houses there's been fewer and fewer of, while there has been a growth, like 250 and above. And yes, we are building new homes in those higher price points, but a lot of this has also become because a lot of neighborhoods that were historically, say, below 100, 150,000 have increased such that they have moved up into a new price category. So the biggest increase is in that 300 to 400 mark. That's up 24.8% to 252,000. 400 to 600 actually dropped a little bit to 166 homes. 250 to 300,000 went up 11% to 172 homes sold. Inventory though, some good news though, is up across the board. So if you're looking to buy a home, there's more to choose from this year than last year. Just, the prices are a little bit higher, and that's kind of been the trend for the last few years. 100 to 150,000, there's 47% more homes, 168. 150 to 200,000, there's 31.8% more homes for 195. 200 to 250 was up 28.1% to 164. 250 to 300,000, there was 44.1% more homes for sale, 209. 300 to 400,000, there was 29.1% more homes for sale, total of 297. 400 to 600 was up 20.8% to 261. 600 to $1 million was up 6.3% to 152, and $1 million or more, there was nearly a third more homes for sale, 32.3%, total of 41. So those are the real estate market statistics for Dayton for June 2025. Now, what can we make of them? Now, if you remember back to your, middle school-ish math classes, you might remember average and median numbers or prices. So average is pretty self-explanatory. Most people know what average is. You take, let's say, 10 houses, you add up the price that all of those houses sold for, you divide it by 10, that gives you the average sales price. Median sales price is a little bit different though. So what that is let's say you have 100 houses that have sold. The median is the point at which there's an equal number of homes at a higher price point as at a lower price point. So it's more of the true midpoint of the market. And it's not affected as much if a large number of very inexpensive or very expensive homes sell. So for example, if a $10 or $15 million house happens to sell, that will really move the average sales price, but it will not impact the median sales price as much. So that's why I usually pay more attention to median sales price. So again, the natural kind of trajectory that the Dayton Metro area has been on for the last, 2-3 years, kind of since the peak June, July 2022 craziness. Things stalled after that, but since then it's been pretty clear. So basically what happens is things slow down through the wintertime. Sellers start to get a little worried, prices go down a little bit, inventory builds a little bit, but then as we get through the school year and into late spring and summer, the number of buyers return. It's a combination of people moving here from other areas, people that already live here looking to make moves into, a better neighborhood for themselves. And of course, as always, the Wright-Patterson Air Force Base transfers and, people PCSing into the area. The nice thing about Dayton is we have had a very steady amount of demand, which has kept the real estate market sustained. But again, basically summer after summer, the last few years, we have seen the number of buyers come back, the number of listings not change too much, and the result is prices continued to go up on in-demand areas and neighborhoods. And so far as the numbers go, despite interest rates, despite economic questions, despite cuts, despite tariffs, despite all of these other things, the numbers show that the real estate market in Dayton, Ohio is still holding pretty well. Now, if you've been watching this, you probably say, Kyle, do you ever have bad news? Yes, I do. There was a period of time there 2 years ago where I was like, hey, this is not looking good. Prices are going down. That would have been like late 2022, because there was basically what happened there was all the buyers that were interested at low interest rates. Whenever the interest rates went up, they all left. But now the entire buyer pool has basically reset and refreshed multiple times with people who are okay with buying and understand what current interest rates are. And so that's why prices have not gone down despite interest rates being high. And they've basically been where they're at now for a couple years now. So it's basically between like high sixes to low to mid sevens is basically where things are. So basically just kind of confirms what I predicted at the beginning of the year, which is, despite prices starting to slide a little bit in the wintertime, buyers would come back, prices would start to come up again. That's what the numbers are showing. I do promise if I ever see anything different in these numbers, we'll definitely share that with you. But again, Dayton, it's dependable Dayton so far as the real estate market recently goes. So that's the analysis for the Dayton Real Estate Metro. So thank you so much for tuning in for these Dayton Real Estate Metro statistics. My name is Kyle Sasser. If you are thinking about buying a house, upgrading or downgrading, downsizing, if you have any questions just in general about real estate, I would be happy to answer any question you have and help you however I can. You can reach me. My phone number is 937-907-6777. It's also a link in the description down below to my calendar. You can book a chat at the time that works best for you. I promise that I can save you a tremendous amount of time. Most people that I speak with, they tell me that they feel that a simple 30-minute conversation has saved them 6 months of trying to Google stuff and figure things out on their own. So, I'm here to be a resource and help you out. So feel free to book that chat at that link down below. Thank you so much for tuning in. My name is Kyle Sasser, and I'll talk to you soon.